I strongly believe that if you are entering into a trading scenario or an investment scenario, you must first train yourselves in all aspects across. Now, investments and trading in stock market are of multiple natures. First, being a day trader. That means I take a position today in the morning, and by the afternoon or by the evening, I have squared it off and I've taken my money home or cut my losses, and I'm out of my trade. I close my trade. That's a day trader. Right? Second would be a swing trader. A swing trader or a momentum trader would be trading for a week or for about a few weeks, hoping that the momentum will be in his favor. Now, stock trading is all about number games, all about probabilities. How good you think a probability is all about. That the probability of you being right has to be better than the probability of you being wrong. Now that will only come by experience, that will only come by study. If you study the markets, if you study what your strategy is. So a swing trader works for about a week to about 3 weeks. A momentum trader works for about 3 weeks to about 3 months. A short-term trader would work for about a duration of about 6 to 8 months. And a long-term investor, I'm using a word long-term investor because he would be investing for a period of about few years. Right? Now, all these kinds of trading and investing strategies have got different strategies to work on. You would look at different time frames of the market and then play on it. Guys, all I can say is first learn the tricks of the trade. You did not become managers and critical employees of your company without refining your skills. So refine your skills, do some paper trade, because when you're doing a paper trade, you are not getting emotionally involved. Your money is not getting involved. But when you do an actual trade, your money is involved, your blood pressure shoots up, you start palpitating, everything will happen. Greed comes into play. Fear comes into play, which is not there in paper. Why I said paper trade for about 3 to 4 months? Because you would then consecutively learn what is it that is helping you to get a winning trade. There is a word called habit. Can anybody spell habit for me? It's H-A-B-I-T, habit, right? Now look at the word habit. Remove the word alphabet H. What remains? A bit remains. Remove A. The bit still remains. Remove B. It remains. Remove I. T remains. That is what it is. You have to inculcate the habit during your paper trades. And the rule of habit is 21 successive days of trading on paper. Then you can think about ramping it up. I can start with a small $100 investment on a weekly basis for 21 weeks, or a $100 investment for a daily basis if I'm earning that much for 21 days. That is just one trading month. You have 22 trading days in a month only. Saturday, Sunday are not trading. So 8 days knocked out of 30, remaining is 22 days. So 22 trading days to develop the first habit. Then you exponentially grow it by 15% or 20% of your trade size. Your trade size becomes important. Your trading habit becomes important. You should get into a habit of coming into profitable trades every day if you're talking about day trading. That is when you will pick up an idea and pick up a strategy which suits you best. This market is full of sharks and leeches. They know all the strategies that you can think of. They have already tried and tested them out. But every strategy works differently for every different individual. Find your own strategy over a period of 1 month, 2 months, 3 months, 6 months. Even if it is 1 year, I don't mind. Take 1 year to find your strategy, but once you get that strategy right, you will not turn back, and Warren Buffett will look like a dwarf in front of you over a period of time, of course. That's the essence. You should practice your one kick 10,000 times. That one kick which you give to the market will be a lethal kick. Don't practice 1,000 kicks, because those 1,000 kicks have got not even the value of half a kick in the market. Practice that one kick, and that should be so lethal that the market makes note of that lethal kick. Kamal, that should be enough for the day. I think I've given them enough thing to chew on.
Yeah, Vivek, we have some questions.
Sure. Shoot.
Yeah, maybe Aditya, you can go ahead and then I'll ask.
Oh, sure. Thanks for that. So, one last question. See, we have been hearing about another term like the market crash, which is going to happen, is what they say. Since you're an experienced trader into this, so can you explain as to, is it something that's coming up, and how near or how far is it, and how do we identify it so that we are not putting everything into the market at a higher price and then see everything coming down? So that's one question which I have. How can we identify that?
Sure, perfect. Aditya, what happens is, every market works on basis of a few fundamentals and technical parameters. Right? Now, you're talking about TSX and TXV and all that. There are some few ratios and some few parameters on which you have to work on. Now, I like to look at it that RSI, CCI and Williams R, I look at these three indicators. Now, of these, CCI and Williams R are forward indicators. Now, there are two kinds of indicators, lagging and forward. Lagging indicators are basically what happens is after the event has happened. A forward indicator would be telling you in advance something is about to happen. Now, if the forward indicator is telling you that you are in an overbought position, an overbought position is that everybody is a buyer. If everybody is a buyer, at one point of time, you won't get sellers around. When sellers are not around, markets will crash. So if you are in an overbought position, now if I can tell this to you guys, pick up an app called investing.com. I repeat, investing.com. It's available on Google Play or on the Play Store, openly available, free of cost. Don't have to subscribe to it. Just pick it up. And download it on your machine, on your mobiles, and watch your markets over there. There it gives you a technical indicator after the overview for any one share, script or the index that we talk about. Now, if the RSI and the CCI and the Williams are in an overbought condition on a daily basis, on a weekly basis, you realize a market is about to correct. Plus, remember, the markets are always cyclic. They will always come down and correct to a previous low or a previous support. And if that support breaks, it will go down to the previous support, the support prior to that also. It is cyclic. It will come down and it will again bounce back. That is the reason why when I was talking about my Indian portfolio, I told you there were times at the end of the year where I was in a negative figure as compared to my investments. I was down by about 100,000 or even 200,000 at times. But in the long run, it pays off. In the long run, it pays off. So you just have to have the capacity to hold if you're talking about a long-term investor. Currently, markets are in a bubbled overbought zone, be it across the globe. Possibly some operators are keeping it, holding it till they don't liquidate the positions, and then they will remove the support back from there. So I would be very careful when I'm trading now. We are in an overbought position. That is number one. How do I identify it? Number two, if I'm a long-term investor, I would not bother about identifying it at all. Because I know I am not there. I know where I am. I am there for investments only. But if I'm a trader, if I'm a day trader or a swing trader, I would go it script wise. All right. One more thing. In scripts, try and maintain not 100 scripts. Don't try and watch 100 scripts. Watch only 5 or 10 scripts Your span of control, if you want a management student, you will realize your span of control is about 5 to 8. You can effectively control and monitor about 8 shares or 8 companies at any point of time. You are not superhumans that you can monitor and manage 50 companies or track 50 companies at a time. So monitor only 8 which you are think or confident of, 5 to 8. That's it. Don't go beyond that, because then you will be a master in those 5 or 8 share scripts only. And you can get your money in that even if you do a weekly swing or a monthly swing or even intraday. You can make money there. It doesn't answer you, Aditya?
Oh, yes, it's more than answers me, Vivek. Thanks so much for that. That was really useful.
Yes, Kamal, you also had a question.
I would like to add a comment that I absolutely agree with your last point, that we should be having a set of stocks in which we should be trading, be it swing or day trading, and we should not be looking at going beyond and looking at large number of stocks. As if we have set, like Vivek mentioned, 5 to 8 stocks, we over the period of time identify how is the trend, and you are in more comfortable position in making a positive trade most of the time. Now I really appreciate your viewpoints for the long term investing, wherein the key takeaway is that we should be investing fixed amount, let's say $100 on the start of month on a particular stock, which would be for long term. It would be more than 10 years, 15 years.
Very true.
And the key takeaway for day trading would, for someone who is going to start, is doing paper trading for at least 21 to 22 consecutive days. Follow your own habit, stick to it, and make sure that you develop your own trading strategy which helps you to make profit every day. Now in this, for investing, your point is that we should be investing $100 every start of the month. For day trading, would you suggest to, let's say, $100 trade you do every day, $100 trade, or you would be suggesting to increase that amount as well during this learning period of 21 days for day trading?
Kamal, what I would say is that don't put a value to the amount that you're going to invest. When you're doing day trading, you are working on a particular amount of capital that you're going to invest for that day. Now, that capital should be not what you are going to be requiring that capital for the next 3 years.
Mm-hmm.
Learn to understand this. I don't require that money. I am trading. I am basically satisfying my human craving to trade, to speculate. Now, some people call it speculation, some people call it gambling. I call it a game of probabilities. Now, that is your human nature to work on your game of probabilities. If you are willing to lose that amount and not get affected, go into trading, go into day trading. Day trading has got large amount of money coming in terms of gains on a daily basis. It could also have large amount of money going out of your coffers at the same speed. Keep one thing in mind: of the traders and investors playing on the stock market, 99.99% people tend to lose the money on day trading. I repeat, 99.99% of people tend to lose their money on day trading. It's 0.01% of people who have been trained, it's a very tough task to trade. It's a very tough and a disciplined task to trade. If you are disciplined, if you are toughened, you can control your emotions, you can control your stress levels, you can think like a computer without emotions, only then enter day trading. Otherwise, don't waste your money in day trading. I would never recommend wasting money on day trading if you are not capable of controlling your emotions and you cannot work without like an emotional-less robo. In a day trading, you have to work like an emotion-less robo. Otherwise, if you work like a human being, boss, you are in for a big trouble. Money is not the criteria. Money is never keep it a fixation. Kamal was saying 21 days to create a habit. I would say 21 consecutive winning days. Not 21 days alone, 21 consecutive winning days. That could take place over a period of even 1 year. I don't even think, Kamal, if he can decide to go in for the next 21 days of day trading, we'll have 21 days of winning days, consecutive winning days. I have still not able to reach it. So I don't know who else can.
Absolutely.